Just going to... So good evening and welcome to this live Ask Me Anything About Property Investing. My name is Saj Hussain. I'm here every Monday at 8:30 p.m. to answer your questions around investing in property. So whatever questions you have about investing in UK property, make sure you pop into the comment section on whatever platform you're watching. We're streaming live again across various different platforms. So we're on Facebook, YouTube, LinkedIn, Instagram, Twitter. I think that's it. So if you're watching on any of these platforms and you're watching live and you've got a question for me that you'd like me to answer, make sure you pop in that comment section and we'll do our very best to answer those. I can tell you now, we're not going to be able to answer all the questions, but we're certainly going to do our best to try and get through as many of them as we possibly can. So I've got my assistant over here who's going to fire the questions up on the screen as and when they appear. So if you've got a question, pop in the comment section and we'll get started. Remember, I'm here for about half an hour, really to help you get further faster in your property investing journey. I don't know everything there is to know about property, but I have certainly a lot of experience and a lot of knowledge that I'm happy to share with you. I have about 15 years of property investing experience using many different property investing strategies. And that's what I'm happy to share with you. I also have a YouTube channel where I have 3 videos a week that will go on to that. So make sure you pop over to that, have a look at that as well. We've just hit 10,000 subscribers. So I'm absolutely grateful for that. And thank you so much if you're watching those. And if you haven't already, hey, you're missing out, and make sure you subscribe to that channel. So let's get our first question up on the screen over here. So first question, Burning Desire on YouTube. Hi Saj, do you think stamp duty gets extended and how do people get properties BMV? I know this isn't the time to do it, but sort of like January 2020, how do people do it? Auctions only, was it? So there's a few different things there. I'm not sure I've kind of grasped all that. Let's try and break it down. So firstly, we'll do stamp duty and then we'll talk about BMV property. So when it comes to stamp duty, right now the government has said at the end of March the stamp duty holiday will disappear and it will go back to the original rates. And in April also we'll have international buyers, people that are overseas that buy property in the UK or in England particularly, they will also pay now a higher rate as well, over and above everybody else's rates. And so essentially this is just so they can make some more money from overseas buyers who are investing money in this country. But where does that leave us as investors? That means we still pay the 3% extra that we pay above the normal rates, but the normal rates will kick back in at the beginning of April. My belief is, and this is just a guess and a best guess on my part really, is I believe because of everything that's going on, I think they'll probably extend that date. I don't think they'll cut it off at the end of 31st of March. And if they do, so essentially if they don't extend the stamp duty holiday, it's very likely it's going to put a lot of pressure on the market. There'll be a lot of sales that will get abandoned as well, that are partway through completion, that people decide they just don't want to do anymore. They don't want to continue to completion. And also you'll find that this will put pressure on the market for prices to start falling or certainly start slowing down. So my belief is they'll probably extend that. And I did a video on this recently, just a few days ago. So make sure you have a look at that on the channel in terms of what I think will happen in the marketplace. Then your second question is around BMV property. How do you find BMV property? So BMV property is below market value. Why would anyone sell anything below its market value, below its true worth? Well, there's many reasons people will do that. Most people won't. And this is the key thing to remember. You're probably not going to sell your home for 10 or 20 or 30,000 pounds less than it's worth. Why would you, right? However, if the circumstances were such that you needed to sell that property, that might be the most common reasons. There's debt, divorce. These scenarios cause these kind of situations. And sometimes it could be you need to immigrate to somewhere else where you've got a great job and you need to move on. You don't particularly want to be a landlord and hang on to that property. People have come together. They're a couple that want to live together. They've got a second property they don't particularly want. It means if they can get rid of that, they can move in quicker and be together. Or the other way around, that people hate each other. They want to move apart. They want to get divorced. They can't stand the sight of each other. They're happy to get rid of that property so they can both go off and lead their own lives. So these are just a few examples of circumstances which lead people to sell something below its true value. And ultimately what you're doing is looking for these problems and bringing solutions to the table of how you can help them move on with their lives. And in return, ultimately, you're getting some flexibility around that price. So you're giving them what they need. You're in return getting a slightly lower price of what it would have been in the marketplace. And hey presto, you've got yourself a BMV deal. Now, traditionally, people will go to the auctions to find discounted property because the belief is that's where the cheap properties go. When properties get repossessed, they go to the auction. So most people believe that the cheap properties go to the auction. But I would say, have you been to any of the auctions recently, or have you looked to see what's happening in the auctions? The prices are absolutely crazy. They're going through the roof, and you're certainly not going to be picking up any bargains or discounted property there right now. So it's useful to understand why these properties exist, where they come about, and how you'd actually go about finding them. And the timing of the market is important as well, because earlier I mentioned debt, and divorce. These are the three big Ds, where you tend to find that these are the circumstances why people are selling properties cheap. So death is probate property. Somebody's passed on, the property's been inherited, the person who's benefiting from that lives 100 miles away. They just want the property gone. They're not really interested in hanging about with it or doing it up. They just want the cash out of it. Divorce, an example where people just want to get away. They want to move on. And of course, debt is the big one, where people in financial difficulty, they want to cash in, get rid of the house, taking some cash from there, pay their debts down, make a fresh start as well. And the way the economy is going, it's very likely that we might start seeing the level of debt rising in this country, and problems and people falling into financial difficulty. And unfortunately, as a consequence of that, you'll start seeing more people that need to sell their property and potentially be able to structure deals that works for them, where they can move on with their life, and you may be able to pick up a property cheaper than what it's worth. So a bit of a long answer, but I hope that was useful. I hope that made sense. So let's move on to our next question now. So our next question is also on YouTube. This is Shiraz. Hi Saj, I have a 4-bedroom family home that has already had some modifications done to it before we moved in. It's quite unique property. How would I go about trying to maximize the property further? So Shiraz, I mean, if we were speaking, I'd ask so many other questions first before I can answer that. So I'm going to have to make some assumptions. When you want to improve it further, it depends what you want to do to it. Let's assume you want to add some value to it because you want to sell it on. And so in this country, when we look at values of property, they're really driven by a couple of key factors. The first one is the location. Where the property is located primarily drives what that property is worth. And then secondly, the other key driver is the number of bedrooms a property has. So when you've got the location and you've got the number of bedrooms, they're really the core of what a lot of property is valued on. It doesn't mean everything's valued that way, but generally speaking, a lot of property, is valued in this way. Now, sometimes you can have a stunning looking house. And in fact, I went to see one very recently, a great house, a really nice house, but actually, it's just not in the best location. And it was not the most desirable locations. So ultimately, it was quite limited in terms of what somebody's going to pay for that house, because what the price was, or what the owner was expecting the price to be, well, if somebody had that amount of money they were looking to spend, they're probably just going to go out a little bit further into the nicer, more pleasant suburbs and buy there if they can afford that kind of property. So this keeps the value down because of where it is. So the location. Now, location you can't do a lot about. If you've already got a property, it's your home, you're living there, you can't pick it up and move it somewhere else. It is what it is. So the other things that you gotta look at is what makes it more desirable. So typically it might be if it's a bigger house, more floor space, or primarily bedrooms. If it's a 3-bedroom, can you create into a 4-bedroom house? If it's a 4-bedroom, maybe you can move it into a 5-bedroom. And beyond that, it's, there's other factors that come into play when you start looking at larger houses like that. So I hope that gives you a few pointers there, but I made a lot of assumptions there because it's a little bit unclear in terms of what exactly you're trying to achieve by improving the property. So our next question we've got is from Jacob on LinkedIn. Hi Saj, for starting deal sourcing packager, would you suggest spending more time gaining knowledge before networking with investors, or do you do both simultaneously? So Jacob, essentially what you're asking is, if you're new to sourcing deals and packaging them up and wanting to sell these deals to other people, do you first go and find the deals, or do you first go and find the investors that are going to buy those deals? And you've probably already worked out you really need to be doing both. So you need to be looking for people that are potentially going to buy these properties from you. So when you find a great deal, you can pass it on to somebody. Now, if I had to pick one, and I could only pick one, I would probably find the investor first. And the reason for that is because if you're starting out and you're brand new in your journey, what you want to do is speak to people that you'd potentially be selling deals to, just to understand what is it they're looking for. So for instance, if you speak to somebody right now and they say, well, I'm looking for 25% below market value property in Birmingham. If you find anything like that, let me know. I'll quite happily purchase it. And the thing is, if you go out and look for those kind of properties, you'll probably find you'll struggle to find those deals, because as we mentioned earlier on, the market is really active. It's really buoyant right now. You're not really going to find massively discounted properties like that in the marketplace. I'm not saying they don't exist. They're just very, very few, far between. So by understanding what your investors want, you can try and determine how realistic they are and what is it that they're looking for, so that you can identify and look for those type of properties. And it may be that you're looking for a certain type of property already. For example, you're looking to source rent-to-rent deals. You do need to have somebody you can sell those onto. So that's where I would start. So when you talk about networking first, yes, I'd build my network, because your network, I'm sure you heard the term before, your network is your net worth, because the people you connect with and the people you know, they ultimately is what going to help you build and grow your business. So through those contacts, you might find other people that are looking to buy, and you can go out looking for them. So I remember a number of years ago when people approach me for sourcing, they'd say, look, we're sourcing property, what is you looking for? I'd give them a very clear criteria. Most people I wouldn't hear from them again, because they don't really have the experience or the drive, or they found it was quite difficult. And sourcing is not an easy business. It can be very profitable, but it's not an easy business. But as long as you're determined, you build those relationships, you're constantly out there finding those deals and negotiating and put them together, you can do really well in this business. And then if you are Birmingham based, make sure you ping a message across to me, and I'll let you know what I'm looking for as well. So thank you so much for that. And our next question, which will be up on the screen in a few moments, from Jack on YouTube, Jack Smith. I have a question to ask regarding rent-to-rents and lease purchases. How common do you find each of these in business, especially when done through a limited or no guarantee or guarantor given? Also, do you ever sell deals to other investors, packaging them up, etc., or even purchase it from other investors, and advantage, disadvantage of these? Okay, so a couple of different questions there. Let's try and break that down, and let's see if I can make some sense of that. So when it comes to rent-to-rents, and if that's what I think you're asking, in fact, Cal, if you just flash that question back up again, the first part of that, that'll be helpful. Rent-to-rent and lease purchase. So rent-to-rent and lease purchase are two completely separate things. First of all, in terms of the type of deals there, I know some of the part of the structure looks similar, but essentially they're different type of deals, and the way you approach them will be different as well. But let's say you've got a rent-to-rent deal that you're looking to take on. And why is it somebody will give you that deal? Well, ultimately what you're doing, you're promising to pay the rent, you're guaranteeing to pay the rent, because this is the phrase many people tend to use. But the person on the other end, i.e. the person giving you the property, they've got to think about what's the likelihood of the chances of you actually paying that. So you've got to demonstrate some credibility of how that's going to happen. And if you're brand new, because look, everybody starts at the beginning. Nobody starts as an expert. We all got to start at the beginning. So at the beginning, you don't have any experience, you don't have the connection. How do you actually do that? What I would look to do is partner with somebody who's already doing this, so you can use some of their credibility, some of their experience, just to get you going and help you moving forward. Because if you're speaking to people and they're looking for guarantors and you don't have a guarantor available, or you don't have the large deposits that may be requested, then you are going to struggle. It doesn't mean you can't do these deals. Yes, you absolutely can, but it just becomes much more difficult to do that, because there's other things that you can do. There isn't time for you to go into the details of those specifically right here, right now. But for example, there's insurance policy you can put into place to cover things like deposits, etc. as well. Now, the other part of your question is, Khalid, if you just plop that back up on the screen for me, please. Just bear with me a moment. We're still streaming on Instagram without dropping the connection, which is fantastic, because typically we end up dropping that connection. Packaging deals, yes, thank you for that. So the other part of the question is whether we package deals and we sell them, or whether we buy deals as well. So in terms of packaging deals and selling them on to other people, this is something I've done a number of years ago, but I don't do right now, and I haven't done recently. And the reason for that is because, I mean, we are actively sourcing. Let's just be clear about that. We're out there, we're looking for deals, me, my team. We're actively, aggressively, every day, we're looking for deals, because we're interested in deals in and around Birmingham. That's our core market. However, there are very few good deals around. So a lot of the stuff that we look at, a lot of the stuff that comes across our desk, it just gets rejected. The numbers don't work. The sellers are unrealistic. Somebody's in the middle in terms of the way they want to do the deal. It just really doesn't work. So we do the due diligence, we look at it, we decide no, it's not viable. Some of them we dismiss within minutes of looking at them, because we can just see it doesn't work. And others, we might be spending more time, we might go out doing viewings, and we look at them and decide, actually, this is not going to work. Now, because there's very few deals around, those that do come around, we're quite capable of buying those and keeping those for ourselves. So that means we just pick those deals and we keep those. Previously, when I was sourcing and packaging deals, what we were doing is finding there was an abundant number of deals. So there's so many deals coming along. Yes, we could buy some of them, but we couldn't buy everything. So we'd pick out those good deals and we'd package them and offer them to other people. Now, here's the thing. Sometimes what people would do is they are buying deals for themselves, and then the rubbish, they sell on to other people. This is something I believe you really shouldn't do, and something I stayed away from right from the offset, because what this does is damages your reputation as somebody that's selling crap deals, because other people will start telling other people, and it's not a massive industry, it's a small industry that we work in, and very quickly it damages the reputation in terms of being an untrustworthy source for property. So right now, because there isn't a huge volume, we're only sourcing what we're buying ourselves. Now, if the market changes in the near future, at some point, where I suspect we'd probably start sourcing them for other people. So I'm not adverse to it. It's just right now, it's not the right market for us to be doing that. Now, when it comes to buying deals from other sources, I'm very happy and I'm always open to talking to people who've got deals. And my criteria is I will want to be indirect to the vendor. That means I don't want 3, 4, 6, 10 people as a chain in the middle, because you know somebody that knows somebody that knows somebody that's got the deal. No, we want to speak to the person whose property is, so we can negotiate and structure it the way that we think will work for us, and we'll very happily pay sourcing fees for that. And there's quite significant fees we've paid over the years for deals because the deals have worked really well for us. So I'm very happy to pay sourcing fees, and I'm happy for people to bring property to us. It's just a matter of the deal's right, and we're talking directly to the owner of the property. And this is only in and around Birmingham. So if you've got amazing deals in Manchester, don't tell me I'm not interested. It's only Birmingham that I focus on. So Jack, I hope that answers your couple of questions there. Thank you so much for that. Let's move on to our next question. This one's on Instagram. So sorry, I'm not looking at the screen over here. So Khalid's flashed up on the screen over here for me.
Aesthetics Beauty.
Thank you very much, Aesthetics Beauty. So thank you for your question. Hi, Saj, what paperwork do I need to apply for a buy-to-let mortgage? Thank you. So just to clarify, I'm not a mortgage broker. I'm not a mortgage advisor, and I can't give financial advice. You need to speak to a good mortgage broker, and I would speak to an independent mortgage broker, and that's one that's not necessarily affiliated to a specific bank like your high street bank, because that bank can only offer the products that they have available in their shop, as it were, i.e. their bank. They're not going to tell you about all the products in all the neighboring banks, as it were. An independent broker's job is to scour the market, find the best possible deals for you in your circumstances. You pay them a fee for the privilege of them finding you these products, and they'll find you the best one that suits you. In terms of paperwork, I've got a video on this which talks about buy-to-let mortgages in more detail, but essentially there's a few different stages. One of these, they want to check you out in terms of your identity, your income, your affordability, all these things. So this is what they're looking for. So you need to get these things together. When it comes to buying property as a home, it's different to buying property as a buy-to-let. Generally, with a buy-to-let, they're then looking at the property in terms of what rent it's going to generate there, and based on that and the value of the property, they'll come up with how much they're prepared to lend you. And then if it's your home, that's primarily driven on how much you're earning, usually a multiple, 4, 4.5, sometimes 5 times your salary is a guideline of what the banks will probably lend you in terms of what they class as your affordability for a property. But really, it's your identity checks, your affordability is the key things. If there's anything else that's going on that might be relevant to the purchase, they need to know about. These are kind of key things. Well, you need to just make sure your credit history is in order, your bank statements all neat and tidy. By neat and tidy, what I mean, not looking nice in terms of you haven't gone over them with the iron. What I mean by that is that all your transactions, or you haven't got weird stuff going on there that the bank would look at there. What are these transactions going on in here? So you've got like a salary coming in, rent payments going out, you've got some expenses, you've got some savings. That's what they want to see, is a nice, tidy, well-managed account. So these are a few tips for you. Like I said, look out for that video that I've got on my YouTube channel, which talks about particularly buy-to-let mortgages and how they work. So thank you for that question. I can't remember whether you asked about buy-to-let or residential, what it's both. So I told you a little bit about both anyway. So next question is from Louise on YouTube. Hi, Saj, informative as always. Thank you very much for that. When purchasing cash, would you always recommend indemnity insurance in regards to searches to speed things up, or are there any other tips for quicker conveyancing? So when you're purchasing with cash, effectively what it means is theoretically you can do that transaction much quicker than somebody who's getting a mortgage. Reason being, because with a mortgage, you've got to wait for the bank to first do the initial approval, or the decision in principle, sometimes it's called. Then an application needs to be made, a full application for the mortgage. Then a surveyor, once their fees been paid, will come out and survey the property, do a report, give it back to the bank. The underwriter will look at it, make a decision on how much they're going to lend you, make you a mortgage offer and say, this is how much we're prepared to lend you. These are conditions, these are criteria. Send it to your solicitor as well. Your solicitor will need to do a number of things to satisfy the lender. And then once everybody's happy and we're agreed with a date, at that point, you can complete the transaction. If you're purchasing for cash, you don't necessarily need to do most of these things. However, it doesn't mean it's not prudent not to. So what I mean by that is, it's a good idea to make sure that you've done your due diligence, that you've covered yourself off. Just because you don't need to do them, it doesn't mean you shouldn't. So for example, a survey on a property, unless you're very experienced and you know what you're buying, or you've got somebody very competent guiding you or advising you, could be a surveyor, could be a good builder that understands the property and that can give you some confidence that actually it's not about to fall down, it probably is worth about this sort of money. Then also with the searches that you referred to, the searches will give you a number of things. Often they're fairly rudimentary things, and an indemnity policy means you can just put indemnity insurance in place to protect yourself against something that might have been in the searches which adverse, which causes a problem. Now, indemnity insurance really covers you for legal costs, not necessarily for your losses. So it's important you understand what the indemnity does. But generally, these are the kind of things more experienced people do. We've purchased property literally in a few days. You can get solicitors to move quickly. They don't particularly want to, but you can get them to move quickly. You've got to incentivize them. You've got to make it clear that this needs to be done in X number of days, and they can get things done for you. And also remember, there are a number of people involved in the transaction. There's you, the buyer, there's your solicitor, there's the seller's solicitor. So there's 4 parties there already, even if it's a cash transaction. So you need to make sure everybody's on board, everybody understands what you're trying to achieve, and that's the only way to get deals done quick. Now, just because you're buying for cash, it doesn't necessarily mean you need to do the transaction fast. So if there isn't an urgency for you to wrap it up within days, as it were, then why not do the searches and make sure you've got everything covered off and make sure you protect yourself properly when you're doing a purchase. So I hope that helps. Thank you so much for that question. The next question is from Walter Reed on YouTube. Hey Saj, how do you deal with liability? Are there any recourse on the loans you get from investors, banks, etc.? I'm not sure I fully understand that question in terms of how to deal with the I don't really understand the question, I'm afraid. So maybe if you rephrase it just to help me, and we'll see if we can come back to that question, or ping me a message afterwards. Let's get the next question up. So this one is also on YouTube. I'm not going to attempt to pronounce the name because I'm terrible on pronunciations. Hi Saj, what's the best way to dramatically expand your property portfolio? Does it only depend on budget or specific strategy? Well, the firstly, I'd question, why do you want to dramatically expand it? And is speed a key factor? Isn't why isn't gradual growth going to work? So it could be something that's driving you to grow it quite quickly. Really you're driven. Sorry, I thought I was going to sneeze then. So really and primarily what you're limited by is how much you've got to spend. So if you've got umpteen millions sitting in the bank, then you can buy a lot of property quite quickly. There's very little that'll stop you. If you know what you're looking for, you do the due diligence, you purchase, you move on, you put a team in place that can manage the purchases, or the acquisitions as we call them. They can manage with any light refurbishment, getting the tenants in, ongoing management of those properties. What is there stopping you? What's primarily stopping you is the amount of money. Most people don't have umpteen millions sitting in the bank for them to be able to just go and do endless purchases. So you have to think about how is it that you're going to grow and why is it you need to grow in that way. And there are many, many different strategies people will use. Some people will use control strategies. What that means is rather than purchasing the property, they're just controlling those particular assets. For example, option contracts and lease options and rent to rents, for instance, you don't own those assets, but you benefit from controlling those assets. And other times it might be using methods where you're purchasing the property, you're adding significant value to really force that value up and the price of that property, so you can either remortgage it and extract the cash and then go on and buy again. So you've got sort of a momentum going, so you can keep buying these type of properties. So there's a number of questions I would ask in terms of why and how you want to do that, because most people are limited by cash by not being able to do that. And of course, it could be other people's money using. So you could be working investors, they're funding deals for you. You could be working with multiple investors, which means that gives you significant amounts of cash to be able to grow a portfolio quickly. But you can also come across growing pains, which means you've got to be able to manage all the people and everything involved in being able to build a portfolio quite quickly. I would say it's more sensible to go at a steady pace you can manage rather than just rushing out and doing this unless you've got the infrastructure in place to be able to keep growing in this way. So let's get our next question up on the screen. So this is from Callum on LinkedIn. When do you expect the market to adjust and we're starting to see more deals appear? So Callum, I've just done a video just a few days ago on this in terms of what I think is going to happen in the market and why hasn't it crashed. And in short, there's a few key things happening in coming weeks which would really make a difference in the marketplace. So, for example, stamp duty is coming to an end. The stamp duty holiday, rather, is coming to an end at the end of March. In April, we'll see the higher rate of stamp duty. International buyers will then also start paying. You'll see furlough income to an end at the end of April as well. The first lot of bounce back loans that people have taken, they'll need to start making those first payments as well, because they had a year of no payments. There's a multitude of things that are happening in the economy right now, which are primarily financial, that can impact the property market. And things like you think, so well, how's furlough going to affect the property market? Well, it's very likely when the furlough scheme ends that many people would lose their jobs that are sitting on furlough at the moment, rather than companies taking them back. They've just got used to working without them. And right now the government's paying 80% of their salaries. And when the furlough comes to an end, they'll let those people go. So unemployment will rise quite quickly. And when unemployment rises, what happens is it changes the mood and the sentiment in the market, and people are not spending as much money. People are certainly not looking to buy property at that moment in time. So that means there's too much stock on the market. There's an oversupply of stock, i.e. people trying to sell property versus the number of people looking. So there's fewer people looking. And what happens is that drives the price down, and you start seeing some slowdown initially in the marketplace, and then start seeing some price drop. So, if nothing changes, if everything keeps going the way it's going right now, we expect over the next few weeks, coming months, certainly by the second half of the year, we'll start seeing a different marketplace where things will be much slower. There won't be as many people rushing to buy property, and we'll start seeing that happening. However, things can change very quickly and very easily. There's a lot of control that the government has an influence over the property market. So, for example, stamp duty alone, whether they extend that, or they bring that to an end, that has a massive impact in the property market and the drive in the property market. So Boris last year also announced that he wants to introduce 95% mortgages. What does that mean? 95% mortgages is back to pre-credit crunch days in 2006, 2007, that sort of time, when pretty much you were putting next to no money down to buy property and anybody could get a loan. And I'm not saying we're going exactly back to that, but what we're doing is we're encouraging high leveraged and highly geared borrowing. So people are putting very little money down. There's very little risk on their part, and most of the money is being borrowed. And even though if the government is guaranteeing some of that, so 95% mortgages even would allow first-time buyers to be able to get onto the property ladder, which will mean those people already in those homes, they can move up to the next one, and this stimulates the market, and you start seeing movement in the market. So just something as simple as 95% mortgages being introduced into the marketplace can completely change what happens in the property market. So there is no guarantee that we're going to see a massive crash happen in a few months' time and there's going to be loads of bargains around. Yes, the market is constantly changing. The only certainty in property is constant change. We need to be ready to adapt and need to use the right strategies at the right time in the marketplace. So in the next few weeks, we'll start seeing change. If everything remains as it is, we'll probably start seeing a slowdown, a drop in the market. But hey, look, if there's certain things that happen in the marketplace, such as 95% mortgages coming in, the government extending furlough or extending stamp duty holidays, they've already talked about extensions on repayments of bounce back loans. All these things will allow more cash flow and confidence in the market, which will keep the property market moving and won't slow down. So it's a key thing there. So I hope you're finding this useful. Have we got time for another question? I think we're pretty much at end of time. So we have got I've told we've got a couple more that we can do. So next question from Danny. Hey Saj, does Section 24 still allow you to offset your expenses, i.e. mortgage payment, estate agent fees and basic tax rate, i.e. 20%? So yes, Section 24, the full effect effectively, if you like, is coming or has come in this year. That means that when you do your tax return next January, in about a year from now, that's when you'll really feel that pinch. That means it will be at the full effect, and you won't be able to offset any of your expenses, any of your mortgage finance at that point in that way, unless you're in a limited company. So I hope that helps you with that, Danny. And our very last question before we wrap up, and just before we get that question up on the screen, if you are enjoying this, do me a favor, share this with one person you think would benefit from being here this evening and listening to this and watching this. Share this video with them so they can benefit from this as well. And maybe next week they can be here and ask a question that would help them ultimately get further faster in their property investing journey. I give up my Monday evening to be here at 8:30 for half an hour, ultimately to help you. And also remember to check out my YouTube channel where we have 3 videos a week. And I said earlier, thank you so much for all those people that watch that and help me reach 10,000 subscribers. I am truly grateful because, hey, look, it'd be a lonely journey if you weren't here engaging, interacting and watching these and giving me the feedback that you do. So let's get our last question on the screen before we wrap up for this evening. And this is from Nemi on YouTube. Hi, I'd like some advice. I've got multi-unit property that was converted many years ago from a bakery into 4 one-bedroom flats. The remortgage fell through as the 2 flats measure 29 square meters each. That is painful, because the lenders will generally want minimum of 30 square meters. So that means it doesn't comply with the minimum size the lenders normally would look for in terms of a standalone mortgage. So there's certain basic criteria that mortgage lenders will have, and it looks like that 2 of those have just fell short of that, which means it won't lend you any money against those as a traditional mortgage. It doesn't mean you can't get any borrowing against those, but it just excludes the mainstream mortgage products. So something else you could consider doing, and especially if you've got a block of 4, and if it is the block that you own, the whole block, and there isn't any other units in that block as well, I'd looked at maybe taking on a commercial mortgage, will give you a valuation on the whole building, the aggregate value. They won't look at necessarily the individual units. They'll look at the income that's generated, and based on that, you might get a bricks and mortar valuation, or you might get an income-based commercial valuation, or maybe even a hybrid of the 2. But that would be the way to do that. And of course, there's many other things you can do. There's some short-term finance you can look at, depending on the value of these. You could even bring investor finance into a private finance. Again, depending on how much cash flow they're generating for you, that you could pay a private investor to keep cash in there, because hey, how much are they earning in the bank right now? Most people, in terms of interest, literally nothing. And there'll be many people that'll be quite happy to put their money into a safe asset like property if it's set up correctly, and also for them earning a very good return on that. It doesn't necessarily have to be a profit share. It could just be a loan. It could be for a few years. You know, it could be 5-year loan, for example, you're doing, which is not the same as a mortgage, a traditional mortgage, but hey, it means you've got some money out of that property to be able to use it elsewhere. So I hope that helps. I hope you find this useful. That just leaves me to say thank you so much for watching. I really appreciate you spending the time with me this evening. Hopefully we've got your question answered. If we haven't, then make sure you're back here next Monday, nice and early. Pop that question in the question box in whichever platform you're watching, and I'll try and come back to some of the comments in the platforms as well. And as I said, make sure you connect with me on YouTube as well. Thank you so much for watching. I look forward to seeing you again next week on Monday, 8:30.